OPEC and its allies agreed to slash oil production by 2 million barrels per day.
Announced by OPEC and its partners, including Russia, the group announcing yesterday they'll slash output by 2 million barrels a day.
That action is expected to send gas prices higher after weeks of decline, and it's sparking immediate new concerns about inflation.
The White House says a decision by OPEC Plus to cut oil production is a clear sign the group is aligning with Russia.
Do you think it's time for the U.S. to rethink its relationship with Saudi Arabia?
Yes, there's going to be some consequences for what they've done with Russia. There will be consequences.
Relations between Washington and Riyadh are not at their best. For years, the United States guaranteed the security of the House of Saud in exchange for Saudi Arabia's flooding of the world market with oil and the flooding Wall Street with petrodollars. Now, however, the scenario has changed completely. Riyadh's latest move has been to pressure OPEC to stand up to the White House and come to the rescue of Putin's Russia. The question is, are the Persian Gulf sheiks really rescuing Russia? In this video we tell you all the details.
But the Arabs made an economic power play. As punishment for this country's support of Israel, 11 Arab countries cut off all oil shipments to the United States.
We are heading toward the most acute shortages of energy since World War II.
Saudi Arabia is extremely influential in the world. It produces a lot of oil.
The oil-producing countries of the Arab world decided to use their oil as a political weapon.
An announcement in Kuwait that prices for Arab oil were going up. A huge increase voted in an overnight meeting without even consulting Western buyers.
But if in the months to come the Arabs cut it off gradually as they threaten, by next summer the shortage will be far more serious than it was this past summer.
Saudi Arabia colluded with Russia, deciding to cut 2 million barrels a day of oil production, raising the price of gas to Russia's advantage. The United States is, well, they're not happy with this decision as the US economy and the global economy enters closer and closer towards a recession. Oil prices going up is the last thing the government wants. As you can see, every time there's a recession, oil prices drop drastically. If you think about it, I mean, this makes sense. During a recession, the economy slows down and the demand for oil drops. Only issue here is that there are many countries like Saudi Arabia, Iraq and Venezuela that heavily depend on oil export revenue to fund their economic growth, with 80 to 90% of your revenue is dependent on something that is as volatile as oil. It's really unsettling.
Providing security, stability to the energy markets. Everything has a price. Energy security has a price as well.
Well, no one is buying that argument. This production cut is not aimed at stabilizing the markets. It is aimed at driving up the prices.
We know that that there's an inflation problem, that this will only exacerbate the inflation problem.
Biggest such slash in production since the start of the pandemic.
That action is expected to send gas prices higher after weeks of decline, and it's sparking immediate new concerns about inflation.
If we go back to our oil price chart, we can see that oil prices can range anywhere from $20 to $180 a barrel. The oil-producing countries banded together to create OPEC, the Organization of Petroleum Exporting Countries. The goal of OPEC is to make sure to keep the price at a healthy level for the exporting countries and consumers. They do this by controlling the supply. If demand falls, OPEC will cut the supply to make sure the price doesn't fall too low. In theory, OPEC sounds extremely powerful for the oil-producing nations, but luckily in reality they don't really have as much power as it sounds. Mainly because one of the world's biggest oil producers, Russia, refused to join OPEC. But things got interesting in 2016. When oil prices dropped dangerously low, Russia decided to join what's now called OPEC+. This way Russia can influence OPEC decisions. Let's go over why OPEC cut production in the first place. Here's a price chart of oil over the last 6 months. As you can see, after peaking in June, the price of oil has slowly been declining in the past 3 months. Now, this is not good news for any oil exporting country, but it is especially bad news for Russia, who is solely dependent on oil revenues to fund its invasion. After all of these sanctions, Russia has made around €158 billion from fossil fuel exports in the first 6 months after the invasion started, and that's not because it's exporting more. In fact, Russia is actually exporting less oil after the war when compared to the years before, but it turned 60% more per barrel compared to the year before because of the high oil prices. So when prices keep dropping, it's definitely not good news for Moscow. That's why after the Vienna meeting, on October 5, OPEC announced that it will cut back production by 2 million barrels a day to prepare for the upcoming recession.
Some of your Democratic allies on Capitol Hill are afraid that the U.S. got played when you went to Saudi Arabia and fist bumped with the Crown Prince.
They're going to have to, there's going to be some consequences for what they've done with Russia.
Consequences for Riyadh after the OPEC Plus group led by Saudi Arabia decided to steeply cut oil production.
Since taking office, the president has been very clear that the United States needs a different sort of relationship with Saudi Arabia.
Senator Bob Menendez said that the U.S. must immediately freeze all aspects of U.S. cooperation with Saudi Arabia, including the sale of arms. It remains to be seen how far Biden is willing to go in showing his displeasure with the Saudis.
The White House said in a statement that Biden was disappointed by the short-sighted decision by OPEC Plus to cut production quotas, while the global economy is dealing with the continued negative impact of Putin's invasion of Ukraine. It said that Biden had directed the Department of Energy to release another 10 million barrels from the Strategic Petroleum Reserve next month. In light of today's action, the Biden administration will also consult with Congress on additional tools and authorities to reduce OPEC's control over energy prices, the White House said. Saudi Arabia said the latest cut was necessary to respond to rising interest rates in the West and a weaker global economy.
Both Democrat and Republican lawmakers say it's time to get tough with OPEC.
Call it NOPEC. We want them to abide by the same free market rules that we do in our country.
Iowa Republican Senator Chuck Grassley says his NOPEC bill gives the U.S. power to sue the group of oil-producing countries for abusing their power over the global market.
Congress want more concrete action to retaliate against Saudi Arabia. One is called NOPEC. It would remove antitrust immunity from foreign nations that take part in OPEC.
As the pushback against OPEC ramps up, and according to the Prime Minister of Italy, it's possible that the West could even create a competitor to the group.
U.S. President Joe Biden criticized the decision, calling it short-sighted. The timing of the decision, a few weeks before the crucial U.S. midterm elections, has also led many Americans, especially congressional Democrats and their allies, to suspect that Saudi Arabia is effectively intervening in U.S. domestic politics on behalf of Republicans and even former President Donald Trump.
This has been a strikingly warm welcome for the president. You saw the king greet him at the airport. That's a courtesy that was not afforded to President Obama in his most recent visits here to Saudi Arabia. And the president was given at one point a ceremonial sword and took part in a peace dance, a traditional Saudi peace dance.
Many Democrats have still not forgiven Saudi Arabia for the warm welcome it gave Trump on his first overseas trip and have assumed that Gulf countries, particularly Saudi Arabia, are strongly aligned with Republicans and especially the Trump faction. From the Saudi perspective, the oil market cannot be stabilized without an agreement among these producers. Otherwise, the price would be determined by unpredictable and even chaotic forces as different producers increase and decrease production of this fungible commodity according to their own agendas. While the Saudis had committed not to let the price of oil rise sky high, they insist they always intended to maintain the price at an acceptable level and prevent its looming collapse. For many years, Saudi Arabia had maintained that the appropriate price of oil was between $80 and $100 per barrel. And Washington was comfortable with such an arrangement as well, particularly as fracking became profitable in the United States. Americans expect Saudi cooperation, especially on oil pricing, and they feel they haven't gotten it at the time of deep tensions and great vulnerability, particularly in Europe and above all immediately before the looming midterm election.